Hello guys, today I think I am on time for this live, and the subject of today is the pre and after hours trading secrets. You know, most of the people or the traders or the investors, sometimes they see a lot of big jump in price, either up or down, but they really don't understand what's going on. I know most of the people or most of the traders and investors who are watching my channel for many years, they know it's about news, it's about earnings, but a lot of people, they get just astonished and they say, why we don't see this? This is the question. How can we get these things and we make money? It's a lot of money. Sometimes a stock double. Even if it is big, it double. Okay? Sometimes a stock that it is $10, it can go to $40, $50, $60. Some they do a lot, especially penny stocks. And most of the people, they want, if there is any strategy or there are any techniques that they can use in order to obtain all that money, and they can manage their small account to become a big account. And this is why some people try to have strategies and techniques about penny stocks and to try to get this money. But understand, guys, that to get this, especially in few hours of the news, you should follow news. You should follow news and have money ready to take any action. Okay? So this is the first thing you have to do. First, you have some money. Let's say, I give you an example. Let's say you have $10,000, or let's say you have only $5,000. Okay? And you want to follow this news. First, you should have your money ready. Okay? You are not in other stocks because you are following news. The news can come at any time. But most of the time, hello Herman man, thank you very much for coming. And the others who are hiding, I don't see them. Now, the most important thing is to have your money ready. Ready, it means you can buy. Okay? This is the first thing. Hello, Fabian. How are you? First is money. Now, understand, I'm telling you the truth. If you are going to do this risky trades as a day trader, you should not throw all your money in one stock. You can get stuck. You can get if you miss the big move and the people they sell, and you can get trapped and you lose a lot of big chunk of your money, especially penny stocks. So hello Rahmatullah Moody. So if you are a trader, you should understand these basics of trading. Okay? Now, we said, first, you should have money ready to buy and sell. You can, and this second thing that you should think of, this is a day trading. This is not a swing trading. Swing trading, it's another thing. Okay? I'm not speaking today in general. I'm speaking about day trading. I'm not speaking about swing trading. Swing trading, there is another thing. You follow the trend, and this is not a trend. Okay? Today the stock is $10. Tomorrow is $20. It doubled. It has nothing to do with the trend. There is no trend. It's just because of the news. Hello, Rizwan Modi. Okay? So, first, in order to get into this pre and after hours trading secrets, the first thing you should be is you should have some money ready to buy and sell. Okay? That's it. This is one thing. Now, second thing, we say the first thing you should have some money, and this money, it is not in other stocks, because if you have, for example, you have $5,000 and you bought some stocks, you are in. You can't just go and you want to exit. Sometimes there are no traders in those stocks, so you can't exit. If you want to exit, you lose a lot of money, and this, almost of you guys know that the bid and the ask will be wide. Okay? Gautam Sundarajan, sir, tell how to beat algorithm trading. Hello, Karim, and good evening. Okay, I will speak about algorithm trading later. Hello, wise man. Now, please, guys, since I am just explaining the lesson, and since it is live, I'm trying to explain everything about the subject of today, and then we can have a discussion and you can ask whatever you want. Okay? Algorithm trading or any other kind of trading. So, now, first you should have money, and this money, it should be ready to use. Okay? Ready to use. It's not you have money in other stocks, and then you see an opportunity to buy, and then you want to sell one of your stocks that you have. Let's say you have 5 positions, you have $5,000. You want to take $1,000 or $500 or $1,000, and you want to try to bet on this stock. You see it going up. Okay? And then you want to have your money, and then you see the stock or the stocks that you are in, the bid and the ask are very wide, so you can't sell, because if you sell, you lose a lot of money because of the bid and the ask. This you should understand very, very well. So the first thing is your money is ready. Or let's say you have 4 positions. 1,000, 1,000, 1,000, 1,000, and then you have 1,000, you divide it into 2, 500, 500, and you just wait for opportunities. This is the first thing, okay? Have your money ready. Second, you should be a day trader. A day trader, it means, I don't mean that you should not be a swing trader or an investor. No. A day trader, it means you do a lot of day trade. Because you practice a lot. You know a lot of things that other people, for example, an investor doesn't care about bid and ask. He doesn't care. Because he buys only once in the day when it is the activity. So the bid and the ask are very short, as very little. It's 1 cent or whatever, or 2 cents for each share. So it's not a big deal. And then he buys, and he have this stock for 10 years or 20 years. So if he loses $1 or 5 or 10, it's not a big deal. But you guys, if you are a day trader, and the bid and the ask is wide, is 5 cents, 10 cents, 20 cents, 30 cents, or $1, you will be losing a lot of money when you want to sell. And since this day trading is just you buy and you sell in the same day, try to understand that if you are a day trader, you buy and you sell in the same day. You don't hold for tomorrow. You don't buy today and you say, let it be tomorrow and see what it happen. What do you think it will happen if the position is against you? You are not here. You are not a day trader. You are a swing trader. Because a swing trader is a guy who stays more than a day. He holds for overnight, for a few days, few weeks, or few months, as we do in our trading account. Okay? So, in order to go one by one, first, you should have your money ready. Second, you should be a day trader. This is normal. Okay? Why I say this? Because it needs techniques. These techniques you should practice always in many stocks in order to get a hand-on training, as they say. To see how because this news is very fast. It's not the news comes in now and you wait for 1 hour and then you want to enter. It doesn't work like this. If you don't get to the stock in the first seconds, in the 1 minute or two, most of the time, the gap, you see the gap up already. You can continue holding. You see after what happened, yes, but if you are serious, it should be after the news directly. Now, number 3, understand that if you are a day trader, that the day in the day trading, it becomes at 4 a.m. It's not at 9:30. 9:30 is everybody. Everybody comes at 9:30. This is what we call the day trading, or the market when it is in full action, where all the day traders, all the people, all the swing traders, the investors, they come to do their transactions. Okay? So I'm not speaking about that. I can speak about that later. But right now, let me just speak about the pre-market and after the market. Because most of the news happened in that era, in that time. So from 4 a.m. to 9:30, this is what we call pre-market. Now, the aftermarket, it's from 4 p.m. to 8 p.m. 4 hours. Okay? Now, most of this pre-market and aftermarket, you understand that the bid and ask should be wide. Whenever you go to, especially penny stocks, there are some stocks when you go, you find 0, 0. The bid is 0 and the ask is 0. What does it mean? It means there is no activity at all and you can't buy. You put buy, but there is no one there. It's like a vacant restaurant or a vacant store or something, or it is closed because of holiday and you want to go and shop. You find the store is closed. Now, when the store is closed, you can't buy anything because the store is closed. So some stocks, when you go to the pre-market or after the market, you find most of the time it is 0, 0. Sometimes you find the bid and ask is very wide. And you get astonished. You say, why is that? It's just because the market makers, those who do transactions, they buy from you and they sell to you. Those are called market makers or specialists. Those guys, if there is no bid and ask, it means there is no people coming. They don't do anything in that stock. It means there is no activity. That's why you see some stocks, they have zero volume. Zero volume, it means there is no buyer showing up to buy. And sometimes if someone comes to buy when there is 0, 0, what will happen is that the market maker can sell to you, but understand that he will sell you so high. I will give you an example. Let's say a stock is at the close at 4 o'clock p.m. It's $20. After 4, there is no activity, really. There is no activity. So the market maker will put $20. he will put it $25. Although the real price of the stock is $20, but he put it $25. Now, if you have shares and you want to sell, you see the last price in the at 4 o'clock is $20. But when you want to sell to him, for example, he give you $15. So you lose 25% of your money if you sell to him. No, if you sell to him, he will accept. You just put to sell. It's gone. Your shares is gone, because the market maker has bought your shares so cheap, and then he can sell them afterwards. We're at 25, or he can sell them tomorrow in the morning before the market or after the market, wherever, because they have all the book, they have all the orders in there, they see the orders, and they can hello Cordwell White. Okay, so understand that you should be ready to trade from 4 a.m. to 8 p.m. Now, for me, I don't mean that you stay the whole day from 4 a.m. to 8 p.m. waiting for the news. No, I'm not saying that. But some people, what they do, they get subscriptions into the news. Some providers, some brokers, they give you the news as they come in the market. Okay? Now, there are some news that are generally known, like the earning news. Earning news, most of the time they tell you it's before the market hour, before the market opens, but they don't tell you when. But you should be ready at 6, at 7, at 8. You should be ready, and they give you the link, and you can hear the announcement, and then you make a decision to buy long or to sell short. This is we talk about it later. Okay? So some people, they do subscriptions. Now those people who do subscriptions, they have most of the time they have big accounts. They are not small. It's not $5,000 or $1,000 that you do a subscription and you go as if you are a big guy. You are not a big guy. You are a small guy. So you can do this by choosing easy things like earnings. Earnings are easy. Why? Because if they say after the market close, now at 4 o'clock, after 4 o'clock, you should just wait for the news. Now, there are a lot of websites like Yahoo. It gives you a link to the company. When they announce, you will hear. Sometimes they do it in the media. I don't know, maybe CNN or Bloomberg or other media, and they do the announcement. The announcement of the earnings in a lot of companies, it's so important because all the people are waiting. Okay? All the people are waiting. Those day traders are waiting for this opportunity to make money. It's a big deal. It's not like us. Like us, when we are not following earning news, we are not following day trading stuff. You are not a day trader. You don't care about all this stuff. But day traders, you should set it as a priority to yourself, because this is where you can make a lot of money. And believe it or not, it's a lot of money if you get into time. If you have techniques, if you are good at following news, if you follow the price, and then you can make a lot of money as a day trader. You are not just following the day when it opens and you see which stocks are going up or down. Okay? So this is another thing. Now, for me, I'm just speaking about before the market opens or after the market close. An example, earning news. Now, there are some news that are not earning news. Most of this is just a company has good news or bad news. They just announce it. Now, when it goes to the market, some people are waiting for these companies or other companies. Most of the time, big companies, they have a lot of news. Some they are medium and some they are small. Small companies, they have news. But what is important, it's not small or big. What is important is that, is the price changing up or down? That's what we are looking for. Hello, Nasa, how are you? Okay, so this is one point. So I am just trying to go from one point to another point. Now there are news that happen during the trading day, from 9:30 to 4. Sometimes you see a big spike like this. A stock was $20, it goes to $30 in the morning. Some news comes after the market opens, 9:30, 10 o'clock, 11, 12, sometimes 1, sometimes even it is 2 o'clock. And some bad news comes. You see the stock doing good, and then at the end it goes like rocket down. And it was green, and then at the end it is so red. And this is why for us, as swing traders, I don't buy in the morning. I don't buy stocks in the morning because I don't know what will happen till the end. Till 3:30 or 3:45 or 3:50. At least I see the market is stable and almost all stocks are good. There is no problem. There is no news, and then I can buy. Okay. Hello, Exit, sir. Thank you very much for coming. So this is one thing that I am telling you now. So I set a lot of criteria about how to follow this pre and after hours trading secrets. Now the secrets is understand that in order to be with the first guys to enter. So I give you an example. Most of this big stuff happens to drug companies. Drug companies, either small or big, they always have big jump, either up or down. Okay? Now, why most of them are drug companies or technology companies? Because the news affect the company too much, but the traders, they don't care. The traders, what they want to see the stock going up or down. That's it, what they want to see. They don't care about the company, what will happen to the company. For example, a company, earnings at 5 o'clock, for example, they think, analysts think that this company is making money last quarter. They think that. They say, for example, the EPS, the earning per share, should be $1. And then the company announced that they lost $1 for each share. So what does it mean? It's a big news for this company, but it is bad news. So the people, when they see this, they hear this, they see this information, they just go and see the price, and they begin to sell short. And this stock, from $20, it can go to $10 or $7 or $2 or $1. Okay? So this is what happened. So you should be with the first guys to do this. And you should have money. You should be prepared to act. You can, for example, work together. Like there are some people who young guys. Most of the time, these things they do with young guys. Young guys like 2 or 3 or 5 students at the university, or they are at working, and they are interested in this, and they make room, and they say, okay, they are 4 or 5, and they call each other, yo, did you see the stock? It's going up, pop. You should go there and you should see the stock moving, because there is no need to buy before it moves. You can't. Sometimes it's good news, but the stock goes down. It happens. So it doesn't mean that it is good news that you buy. You should wait a little bit, just 1 second or 2. You see where the stock is going. And then when you see the stock is going up, you begin with high volume, because there are a lot of people, they have already bought. Rapid bull fog. Thank you very much for your question. I will answer your question when we finish. Okay? So as I told you guys, that the main thing for me as a trader, well, when I was doing day trading a lot, for me, if the price doesn't move, I will not buy or sell short. Never. Let's say the stock is $20. You begin to wait, and then you get the news. For example, you get the news like the others. Now, when you hear the news, you begin the first seconds. The guy or the executive is going the announcement of the company. Especially when it is earning news, most of the people, they know it's in the afternoon or it's before the market opens. So you are preparing yourself to hear the news. And they see that the price from $20, it begins to go 20 and 50, 21, 22, 23. It's going up so quick. And understand, guys, that it is there is no market order. There is no you want them, and you say to the market maker, I want it now. I want it at 21 because you see it's going up. No, you can't do that. So what the people do, they put limit orders. This is what you can do. Limit, it means in general that it's the market maker, when he looks at all these limit orders, now they fill them so quick. So if you put $21, let's say the stock was 20, you see it going very, very quick to 21. You put, for example, 21.00. Most of the time, if it is 21, most of the time, your order will not be seen. Why? It's just because some people, they put 25 cents. So the market makers, who will feel the first, you or him? He will feel the best bid. For him, he wants to sell to you at 21.25. He doesn't want to sell to you at 21. Since there are a lot of bidders better than you, he will begin to feel the first. And then when the stock is 22, 23, your 21 is dead. Your order is dead. No, he will never see it again because we are in 22 or 23. He can just sell it to you at 21 and the stock is 23 and you get $2 just like that. No, it doesn't happen like this. So guys, if you are just trying to follow this earning news and the news, you should just have some time for it. if you go to, for example, Yahoo Calendar for earning news, it gives you the day. What are the companies that will do the earning news today after the market close? Okay? So for you, first, you should have your broker chart, because the most of the charts that we are using are trading day charts. It means they show you from 9:30 to 4 o'clock. That's it. So what has happened before or after the market hours, you can see it. So you should rely on a good charting software. There are some softwares that you should subscribe to. But this is when you are good, when you have practiced a lot, when you are good and you have some money to trade, and then you can go and you become like a professional trader. Okay? You are not anymore a beginner. You are an intermediate, or you are advanced student or advanced day trader. It means you have traded 100 stock, 1,000 stock, 2,000 stocks last year, the other year. So you begin to have experience on how these things work. And then when you are successful, you can make your money big. And then you should need a large account. You are not, when you know how to trade, if you have only 1,000 or 5,000, you see opportunities every day, but you can't. You can't buy because you don't have money. You see the opportunity right away in your hands. Okay? And this is what happened for all the people who know how to trade, but they don't have money. That's why they go to this proprietary trading brokers, and they give you a lot of money, and they begin to, as they say, to help you and the other stuff. For me, I don't do that stuff, proprietary trading. I have made a video before, and some people, they said to me, "Oh, it's good." I say, "Okay, show me how it is good. Show me." Okay? I will give you an example of they say to them, we will give you a lot of money and give us 50% of your profits. How can someone give to other guy 50% for what? For just lending money? Lending money is by interest rate. Do you understand that in the day they don't charge you for interest rate when you use their money? Except when you hold for tonight. So their money is free to use. So the other property trader, they say, "Okay, you use our money. If you make a profit, you give us 50% of your profit." This is not. And they give a lot of fees, a lot of do here, a lot of here. And these brokers begin sucking these traders' money. But those traders, although I have made videos, although I explained a lot of stuff, but because they need money, they don't listen. Okay? And when you give them a suggestion, you say, "Okay, see what did happen. See what the brokers are taking from you. They take advantage of you because you don't have money, but they play with your money, and they have a lot of fees, a lot of stuff. That's why they say we help, but they took too much money from your account." And you begin, either you lose money or you make money. The broker doesn't care, because he has already taken money from you even before you make money. And if you lose money, it's your problem. If you wipe out your account, it is your problem, because sometimes when they give you 5 times your money, let's say you have $10,000. They give you $40,000 in your hand. What if you enter a 50,000 position and you lose 10% because of this problem of news, or earning news. You think you hear good news, you buy a lot, and then after a few minutes you see that the stock is going to gap down. You see the stock is going, you don't understand anything from that, and you become paralyzed because in these situations you should be having a lot of trades to understand what's going on, when to exit, when not, because the things go so quick. So if you anticipate, you hear that it is good news and you buy long, after 1 minute or 2 the stock is gapping down, you just lost almost all your money, because you don't follow the basics of trading. The basics of trading is not to predict, it is to see and act. When you see the stock is moving, and then you buy. When you see the stock is going down, and then you sell short. And it should be a little money that you spend in each stock. Please don't put a lot of money. Don't be greedy. Sometimes the stock is going up for a while, then it goes down, then at the end you will lose a lot of money. So, guys, in general, these steps that I told you are very, very important in your success. There is no one on earth who will tell you that the earning news, it will be good because of this and this and that. There is no one who tells you this. I say, okay, if you are telling me that this will have a gap up, put your money. Let's see, where is your money? Put it there. They will never do that, because if he knows, he will never do that, except when he is a stupid or a gambler. Now, there are a lot of people who are gambling a lot, especially the earning news. They gamble. They hear what the analysts say about this company. Oh, this company should have made a lot of money because of Christmas. Oh, let's go and buy before the earnings. It could be a gap up and we make a lot of money. But after that, you will see that the stock got a gap down, and they lose a big chunk of their money, and they say, why the stock did gap down? It is not the company who decide for a gap up or gap down. It is not. It is the traders who decide. So you should understand this idea that it is the traders who decide for the gap up or gap down. It's not the company. It's not the analysts. It is not. So if you are a trader, keep focused on the chart. Keep focused on the news. What is its effect on the chart? Is the stock is moving? Is the stock is going down? At least you have an idea what the majority are doing, because this is an auction. Because a lot of people, they don't understand. Hello, Al. Hello, Al. Thank you very much for coming. Now, what do you mean when I say trading is an auction? Auction, it means there is bid and ask. People are, if the stock is going up, people are going to pay more. Let's say, for example, a stock is $20, and there is a big news, and the stock in the day is going to $30. Just an example. It goes 50% in this day. Now, why it goes 50%? Yes, it's because of the news, but because of the traders that they buy. The more it goes up, they buy. Why they do that? Because they see that stock is going up. Someone who bought at 20 and the stock goes to 30, he is making 50% or 45%. But let's say someone bought at 25 and he sold at 30. He is getting 25%. Okay? So it depends on where you buy. And when you buy, If you are a day trader and the stock continues to go up, you will be making money. And it doesn't matter how much you make. It means it is a good trade that you have done. You make 5%, 2%, 10%, 20%, 100%. It doesn't matter. Some stocks go so wild that it goes 100%, 200%, 300%, 400%, 500% a day. Just because of the good news and the people, they come, they buy. You should be one of them when the good things happen. It doesn't matter if you come little late. The most important thing is to seize the opportunity and to make money. But understand that you should not be greedy. You should not be greedy. Don't throw all your money in one stock. If things happen and things change, it was going up, you buy, but after a few minutes it go down and it's going down too much. And if you don't exit on time, you will lose a big chunk of your money. Understand that there is no one direction in the day. And this is some people, they get mistaken. Sometimes in the day, you will see that it goes up, it goes down many times. So the stock is volatile. It goes $4 or $5 up, then it goes $3 or $4 down, then it goes $4. It means there is a big play. And the guys who are following, they follow the stock where it goes. It goes up, they go long. It goes down, they sell short. So they do according to what they see, according to their perception. So if you are a day trader, you should be accustomed to change your mind, to change your opinion very quickly, not to wait too much. If you wait too much, they will crush you. They will crush you. And all your money is gone. It's not the traders who take your money, but you have left your money unattended. It's like you when you have a store, like what did happen in the looting and the riots before in USA here. Okay? Some big retailers, they have been looted, and a lot of people, they go and because it's over, no police, so the people, they steal. They steal because they see other people steal, and they just, they steal the thing. Al said, you tell them, sir. Okay. Daz, hey Karim, hey Daz, how are you? Okay. So, in my whole life as a trader, I see that the best time to enter is when you see the stock moving. If the stock doesn't move, it doesn't show where it goes, how can you decide? Forget about people, they say to you that there is a gap up because this company is doing great. You base yourself on fundamentals. But understand that fundamentals, it is not what moves the stock up or down. It's the trader perception of the trade. Sometimes we have good news and the stock gets gap down. I have seen it many times. And you get astonished. You just want to understand. You go to the news after 1 hour, 2 hours, 1 day, and you read that the company has made more money than when the analysts say. But you see the stock is going down into a gap down. And then some people begin to say, the investors think that this would not be good. No, they give any stupid reason to show you that they know what's going on. No one knows. It is just an auction. If you take these fundamentals from your head as when you are a trader, you will be the best trader in the world. It means just follow the price. The news make the price change dramatically up or down. Okay? So, you should follow only the price. You hear the news, see what the other guys are doing. Because there are other guys that are bigger than you. Some are hedge funds. They have billions of dollars in their hands. They are following this news, and they are there the whole day. You find a hedge fund has a lot of people working with him. Any news that comes, and he see the news. He see, what's this? It's going up. Buy 10,000 shares or 100,000 shares. Buy. Sell short. This is how they work. Now they are not going to get all the stocks very good, but at least when they get a stock, they will make a lot of money from it. This is how the people work. You can make a group, for example, if you have friends that are interested in the news, in penny stocks or news or drug companies or whatever. You can make a group and call each other when there is something. Okay? You see, okay, today we have earning news of 5 companies, and we try to see if this company, just to see what's situation or what the analysts say about the EPS, and just follow the news. If something is good, you can make a lot of money from it. So that is as easy as it is. There is no something that it is hidden that someone knows that the stock will be having a gap up. This is stupid thing that some people still have in their mind. Please take it from your mind. There is no hidden secrets that if you know the stock, if it's going up or going down. Sometimes my students, when they ask me, the earning news, I say, okay, the earning news is a gambling. You gamble as you like. If you want to leave all your money there, it's the whole risk. You can get a gap down and you lose 10%, 20%, 50% of your money. Understand that. Now, it can gap up and you make money, yes. But understand that you are at a big risk. Don't tell me that you don't know. I tell you that you should know this. There is no someone who tells you, who reads the stars or sleeps and wakes up with, or God send him the stocks that will have a gap up. This is stupid things that a lot of people are following online, and they are following some gurus that they tell them this is gap up, this is gap down. This doesn't work like this. Okay? If someone knows, if you know that stock tomorrow it will double, for sure, what will you do? You can sell your house, whatever is your house worth. You sell it, you take the money, you put it in the broker, and someone tells you tomorrow the stock will gap up. You buy stock today, tomorrow it will gap up, and you double. You put $200,000. Tomorrow you will have $400,000. Is that real? No. It doesn't work like this. It doesn't work like this. In news, you will never know. Even the news are good, you might have the stock go down. Sometimes the stock is having bad news, according to the analysts, bad news. And you see the stock is going up and it continues to go up for a while. And you ask yourself, why? Why the news are bad and the stock is going up? As if you want that the stock do as you wish. This will never happen. It is not, the market doesn't work as you wish. It is an auction. If the stock is going up, people will buy more and more expensive. For example, Tesla was $250. This year it goes from $250, it goes to $2,200. Now if you bought at $250, you make money? Yes. You bought it at $500, you make money? Yes. $500, $1,000, $2,000, yes. If you bought it at $1,500, you make money? Yes, you make money. $1,800, yes, you make money. So the whole stock, when it's going up, you are making money whenever you enter. So it's better to be, this is what we call auction. The stock is going up and the people are buying. And then someone told me, they bring me this stupid idea, the indicator. And they told me, oh, it's overbought, it's oversold. Man, where do you see this oversold in Tesla? Show me where you see it. The stock was $250. It goes to $2,200. Where is this overbought? Where is it? Show me. Go to your indicator and show. It doesn't work. That's why the stock market is about the price, is about the auction, is about to follow where the stock goes. Is it going down or is it going up? You can make, and then when you buy or you sell, you should see afterwards. Are you correct? Yes or no? Because sometimes you buy, the stock goes for a few minutes up, then it goes down, then you lose your money. So you should continue to oversee your stock, to see it. That's why day trading, in the news, for example, people, for example, at 5 o'clock, they buy, 6 o'clock, 7 o'clock, before 8 o'clock, they sell. Day traders, they don't hold overnight. They don't. Why? Because they want to see where the stock is going in order to get their money, and their money sleeps in their accounts. It doesn't sleep in the market. You don't know tomorrow what will happen, because this is a big risk. That's why day traders, they don't do swing trading. They say, okay, I put $100,000 in the stock. Tomorrow there is a gap down and I find 50,000. I lose 50,000, 50% of my money. So I don't want to do that. I want to see my stock as it is. Okay? Rapid Bull, you say, I like the Tesla example. Yes. Med Mohammed Ebina, is Tesla up over 1,000? Yes, Mohammed Mahmoud Ebina. Yes. After 2 or 3 months, it was $2,200. There is a split. Maybe you don't know about the split. Mohammed, you don't know about split? It was 2,200, and then we have 5, 4, 1. Okay? It means if you own one share with $2,200, you will have 5 shares. You divide 2,200 by 5 and you get the money. Like Apple. Apple was $500 just 2 months or 3 months ago. They do the split and it becomes 125. Now when you see Facebook, it's only what it is right now, 118 or 120, and it was 500 just a few months ago. So Mohammed, you should see my videos about Tesla and Apple. I made a video about what they happened, I think a few months ago. Okay? Cordell White say trader psychology is extremely important. Yes. Now I will explain to you what do you mean by trader psychology. Okay. Trader psychology, it means that you do not overreact. You should not be greedy. You should change your mind according to the price change. Because this is what we call psychology weakness. Day traders who lose their money is just because they have a psychology weakness. They don't adapt. Okay, I give you an example. Let's say the stock is $20 in the morning. You see it's going up. You buy at $20.20. It goes after 1 hour, it goes to 21. You are making money. but after half an hour or 1 hour, from 21 is going down. So if you don't exit very quick, I'm not saying to take your profit, but at least you don't lose your money. And you begin to look at the price going from 21, then 2050, 2020, 20, 19, 18, 17 is going down the whole day, and you don't react. This is, you become like paralyzed, like handicapped in your mind. Because maybe because of your weakness, you are not firm, you don't know how to trade. This what makes you lose. You don't adapt to the situation. Adaptation is the biggest intelligence that the human have. How, for example, the human being, where we have a few people in the world with living with lions, with tigers, with dangerous animals. How can these guys live until now? Why those animals? We have a lot of animals and few people. Why they are not eaten? It means they adapt. They change from one dangerous place to another. They all stay together into a tribe. When they go to hunt, they go together. So they can defend themselves. If it is cold, they wear clothes. If it is hot, they take their clothes off. This is adaptation. Some people living in the desert, they go to some places that are more better in the climate, and we have trees and we have good land, and they settle there. Okay? So this is what we call intelligence or adaptation. People, you should adapt. If you buy a stock and you see that you are losing, if you don't exit on time, it's your problem. And this, for me, I say, you don't know how to trade. That's it. You have psychology weakness, you have some problems in your life, and you have a lot of stuff. This is your problem. So when you come to trading, you should be neat, you should be clear. It's business. You do business. You come here, you have 2 hours, you wait for the news, you have some money, and you have the chart, and you are looking. You get the news. If it is good, you see the stock is going up, boom, you jump in, you buy some shares, whatever shares you have or you want, and then you follow. If things go up, you want to sell, you sell with a profit. That's it. And then you go sleep easily. And you are happy that you made money from this stock. Okay? So this is what even if you don't make money and you enter and it's not good and you don't make money, you just exit. Don't buy today and they say as a day trade like some people beginners do. Maybe it happens to you. It happens to me before when I was a beginner. How this work? I buy in the morning a stock, it was going up, then it was going down. And then I say to myself, because of my psychological weakness, I say what? Let it for tomorrow, maybe it's going up. Because you see you lost some money, 5% or 2% or 10%. You lost some money. How you say, okay, maybe tomorrow the stock will go up and I make more money, and then I sell. You are thinking just to get your money back. As if the market has taken your money. The market has not taken your money. It is you who give your money to the other traders. That's why they took it. If the people are selling short and you don't and you are going long and all the people are selling short, they took your money if you don't exit. Okay? That's as easy as it is. محمد محمود إبينا كيف ممكن نقضي على الخوف عند الدخول في الصفقة. Okay, excuse me, Muhammad. Here is my email. Because I can't speak Arabic here or French, because all the people here are speaking English. So, Cordell White say, I love the way he explained shit. Yes, I explain all the bullshit in the trading and what the people do. That's why I'm here. I'm here just to explain things that maybe, I don't know, maybe some people are talking about, but because of my experience, I will show you why people lose money. You are not getting to get money if you are doing the same mistakes. Okay? Now, GGG1234-ish. I will answer your question when I finish. Now, I have a question about when you buy something and you are scared. Now, before I answer this, first, why are you scared? Why? Why are you scared to buy this stock? Because maybe you know that you are gambling. You know that you are gambling. You are not trading with logic. Because the market, it's all math. I buy at $20, the stock goes to $25, I make $5 a share. It's math. Okay, it's not magic. You should have exact calculations for what you do. Now, when you are scared, it means that your trade maybe is a big risk. It is a gambling. For example, I give you an example. There is a stock. You see in the news, they say tomorrow is the earning news. Earning news after the market close. You go online and you see analysts, they say, oh, it might have a gap up. Oh, buy. You get influenced by their opinions. But you don't think that these people, they don't know. It's like you. They don't know. It's the same as them, as you, because you don't see the future. They don't see the future. So you go and you buy a big chunk of a stock. Let's say you have $50,000. You take this $50,000 before the market close and you buy a lot of shares of this company, thinking that after the market close, after the news, there is a good news, you can make $10,000 or $20,000 or $30,000. Yes, it happens. So you wait, for example, till tomorrow. Let's say it is in the early morning or something like that, and you can't sleep. You get scared at night and you begin to think, what if the stock doesn't get a gap up, it gets the opposite, a gap down? What will happen to my money? Aha! Here you begin to be scared. Now, when you are scared, you think that you have done a mistake. And if the stock market in the morning, it shows that there is a gap down and you lost 10% or $10,000 or $20,000, what you should do? You are going to cry? It's something that you did by yourself because you think that other people know better than you. For the future. I'm not speaking about the past or something. The future, no one knows. Rest assured that you don't know. No one knows. So don't trade on the prediction that something will happen. For me, I don't do that. For me, I should see the price move and then I do an action. That's the real trader. That's almost all the good traders do. You see the chart. That's why we have the chart then. Why we use the chart? Okay? Why we use it? We use it to see where the price is going. And it is visualized. That's why it is, when you see it, it is good. For example, for me, I like the candlestick. Some people, they like the line chart. Some people, they like whatever chart they like. But for me, I like the candlestick. I like to see how the stock moves. It means what the people are doing. Because every price that you see on the chart is the action of some traders. And it is an auction. It means if the stock is going up, the stock will become more expensive. If the stock is going down, it becomes more cheaper. Okay, that's it. Thank you very much. Now, we have 1 hour 5 minutes. So, guys, I will begin to see your messages, to see your questions, and then I can answer them. So the guys, all of you guys who are here, I say hello. I don't want to go one by one. Okay? Now, Gautam Sandarijan say, sir, tell how to beat algorithm trading. Now, first, what is this algorithm trading? You know, there are some people who watch TV. I think, Gautam, you are watching a lot of TV, a lot of mysterious things, a lot of softwares that make you the money. Now, understand this. I will tell you something. Any software is based on criteria. There is no a strategy that it is 100% successful. Okay? So the trading software that they are selling or they rent have some criteria. Sometimes it makes money, sometimes you lose money. It's just because of the criteria that are there. And this is what we call algorithm trading. You know, the biggest losers in the market are the mathematicians. Now, why they lose? It's just because they take stock market as logic. The stock market is not logic, it is illogic. Illogic, it means you see the biggest company in the world and its stock is going down. And you say, why this company is making too much money? You see a company making $500 billion a year. But you see its stock is $100. Okay? It makes $500 billion. But the stock is only $100. And you see a stock with a company that it is only, the capitalization is only 50 million or 100 million. It's just a very, very tiny company. Going from $10, it goes to $200 in 1 month. This is illogical. And that's why you should not take trading as related to fundamentals. And this algorithm trading, it is just a software that has rules and strategies built in. But those guys who created it, they can't make money from it. They will never make money. Because sometimes they make money, sometimes they lose money if they let this machine, this software, because according to the thing. So it doesn't mean that they are going to make money. So that's why you see these softwares, they are sold or they are rented. I have seen someone before, when I was a beginner, and we were in a meetup, like before a meetup where the people, they come. Some people speak about indicators. Some people speak about brokers. They come to show their products. Some they show their indicators. And someone contacted me by email from the guys. They were there because I was speaking, and they see my name in the meetup or something, and they see, oh, this guy is a new buy, he's a beginner, let's play on him and sell him something. Now he sent me an email. He said, oh, I saw you, and you are very enthusiastic, and you want to learn. I have something good for you. There is a trading software. In each 15 minutes you can make $500. I say, yes. 15 minutes. It means I just put this software, and I put $5,000 or $10,000 or whatever $1,000 you have, and then if every 15 minutes you make $500, okay, I will become a millionaire in 1 month or 2. And then I met him in his house. He invited me to his house. I go to his house. He showed me the software. And I tell him how this works. He tell me, no, the chart knows, this software knows what to buy here, and it goes up here. And I ask him the question, how this software knows that you should buy here? He can't answer my question. And I understand later that all it is a built-in strategies, and he is a seller. Because if it makes $500 to him, he will never sell it. Even with $100,000, he will never sell it. Even with $1 million, he will not sell it. Do you understand the game now? Don't think that there are some people always making money and they never lose. No, trading, you make some trades, you make money. You make other trades, you lose money. This is typical for everyone. There is no one who is always making money with every trade. It's impossible. It's impossible because when you buy, you think that the market is going up, then it changes after a few minutes. You lose money. Whatever you are clever, whatever you are a very good trader, but this is a probability that you should take into account, that you should lose little money. But a good trader does not lose big money, except when he do crazy trading, when he do a gambling trading. Okay? Yes, some people, they do lose a lot. Okay. So Gautam Sandajarjan, thank you very much for a question about algorithmic trading. But what I suggest to you, please try to find, I don't say my strategies, but whatever strategies, try to practice, try to rely on yourself and build your own strategies, your own techniques, and you can make money by yourself. Do not buy a software, because if you lose all your money, it's over. You put $10,000, you put this software, and they told you it will make money, and they tell you just let it trade, buy and sell. By the end of 1 month, 2 months, you find that you have no money. To whom you should blame? You should blame those who sell to you. Okay? So understand that it is a big game. So stop being naive in the stock market. In the stock market, you should be clever. You should study. You should learn from other people who are successful, who have effective strategies. Okay? For me, for example, when I have my own strategies, I show you by the stock, we buy, you see them, we stay 1 month, 2 months, 3 months, according to the trend, I sell them, you see my trades. I can't lie or hide, or I can't, because you see each week, you see my portfolio, and you see what I bought, what I sold, okay? So you should be practical. You should learn. At first, you rely on some people because you don't know trading. But for my students, after 2 months, 6 months, 1 year, 2 years, 3 years, until they become proficient, they make money and then they work with their own. So almost all my students are my friends right now. And we discuss each day, what did you do? What did you buy? What did you sell? What's that stock? And they still ask me, because we are friends right now, so they ask me wherever questions about stocks. Now, another question. Rapid Bullfrog, what was the worst example of you buying a stock just before market close and being stopped out due to a huge gap down in the next trading session? Yes, in our trading account, I bought Zoom. But I know it's a big risk. And I told my students, guys, this stock we bought it before. Well, I don't buy because of the earning news. No, I bought it before. But I told them, guys, the stock is in earning news on Monday after the market closed. This Monday, last Monday. I say to them, because I have explained always the earning news. I say the earning news is a gambling. Either you should take the whole risk, you hold, or you can sell half before the market close, or you can sell everything, and then after the gap down or gap up, and then you see if the stock is going up, you buy it again. Now I hold all my shares, and I got a gap down. But for me, I know beforehand, even if I get gap up or gap down, I know what to do. It means I see in my life hundreds of gap up and some gap downs. I see them. Because sometimes when I trading a lot in swing trading, sometimes you have a gap ups and I make more money. Sometimes I have a gap down. But it's part of the game. You should have to risk sometimes. Okay? But this is one of the new stocks just this week on Monday. If you go to Zoom, you will see that it gapped down like 15% or something. You will see it in my if you go to my trading account, you will see that this stock has a gap down and I lost some money. But understand that I am making money from other stocks. That's why I am not down. My portfolio begins only 2 weeks or 3 weeks, and I am already 17% up. So I am good. So I know that I can in the future I can make more money and I increase my profits in the future if the market is so strong now. Okay? NASA said that nobody can predict how the traders would react to news. Yes, this is true, NASA. Wiseman said market is illogical. Yes, it's illogical. And that's why you find a big investor putting 1 million, 2 million at Walmart. After 10 years, 20 years, he is not making that much money. But you see, from Tesla, 250, it goes to 2,200. He will be making hundreds times, thousands % than buying Walmart, for example. You see the difference? You see the difference between a stock that it is flying and the other stock that it is old and it is no one is trading. No one is interested in those big companies because except when you have a very large money because you get dividend from them and you get dividend only, you are not interested in the stock if it goes up or goes down. But a lot of people, they want their money to grow up very, very fast. So they use drug companies and technology companies. Rapid Bullfrog say, I like the Tesla example. Tesla is crazy. Yes. Not just Tesla. I have seen other stocks more than Tesla. There is one which is called NVAX. We bought it this year. It was $14. I think it goes after a few months to $150. So it is more and more and more than Tesla. And it is a stock that you can see it's going up for many months. So we bought it for us. We bought it when it is 14. I think when it is doubled, we sold it because it was going down. So I sold it. It go down. There it comes back again. And I didn't see it. So it goes up to 150. Okay? So understand that you should, because we have a lot of stocks in the market, you can't just go to see everything. Even if you see everything, you can't buy. That's why you are limited with your money. And you can't be everywhere. This is the truth. There are thousands and thousands of stocks that are going up daily, that they go have a good trend. But you can't know every stock. Even if you know every stock, you can't buy them. You buy 1 or 2 or 3. So you are just wasting your time. Okay? Now, Muhammad Mahmoud Ibina said, is Tesla up over 1,000? Yes, Muhammad. Try to see, because now you see it's nearly 600 and you don't see 1,000. And even if you go to the chart, you don't see it. It's just because the chart has been changed, because there is a split. Please, Muhammad or Mahmoud, send me an email, or you can find, if you go to Abdul Karim Ramain, if you go to my Facebook profile, you find me, you send me a message and we can talk. Okay? Cordwell White said trader psychology is extremely important. Yes. Cordell White say, I learned the hard way. Yes, almost all the people you will learn the hard way. There is no easy way. When you begin to trade, you should lose sometime money at first, because you don't know anything, so you should lose. This is part of the game. Cordwell White said, I love the way he explains shit. Yes, it's true. Things happen in the market. People get a lot of problems. Now, GGG said, maybe you answered this. If you see a post market run up, say like $2, what you should do? Now listen. $2 after what? How much is the stock? Are you going to do day trade? And if you buy after $2, what did the stock do after that? It's not the $1 or $2 that you see. It is after what happens after $2. Is the stock continue to go to profit for $2, $3, $4, $6, $7? You make money? Or from $2 it goes down to $1.50, $1 and begin to lose money. Because trading is about where to buy. It doesn't mean how much money you see in the stock. The problem is that when you buy, is the stock continue to go up? Yes or no? That's the question you should answer. And if you bought at $2 or $1 or $3 or $5, it doesn't matter. What matters is after that, what the stock is doing. So stop thinking about the dollars. Try to think about the trade itself. You are a day trader, yes? Okay. You see a stock, there is a news, it begins to go up. $2, it goes up. Whatever is this stock. $100, it goes to $102. Or $20, it goes to $22. Or it is $5, it goes to $7. Whatever it is. It's not that important. What is important is that, does it continue to go up, yes or no? Because this is how you make your money. You don't make your money because the stock has gone $2. This is over. This is the past. Now you are not thinking about the past. You think about the future. So GGG, try to focus on what will happen after you buy. This is your main concern. Because you make money after you buy the stock, you begin to make money or lose money. So that is the most important thing. But $2, $1, 50 cents, it depends on the stock. And I can't give you thousands of examples. It doesn't matter. What matters is after you buy. So GGG, this is what you should focus on. Daz said, I like Karim too. Thank you very much. Muhammad Mahmoud Ibina say, شكرا أستاذ. Yes, you can محمود تقدر تكلمني أو تكتب لي في الفيسبوك. You can just write to me on Facebook if you have some stock, and we can discuss some example if you want to. Thank you very much. So GGG said, what do you think about government angle investing? Meaning, whatever the government is big on invest is those stocks like EV and solar these days. Now listen, here in USA, the government doesn't have companies. Most of the companies in USA, they are private companies. The government doesn't own. The companies that they own and they take control of is like electricity, gas, and the other stuff. But they don't control solar energy. Solar energy, we have companies that they are doing this. Yes, it asks the people or it pushes people to do that, yes. But their investment, it is not to make money from them. So it's not because a company throw the money, it means that you throw the money there. So here you are going to do what? You are choosing your company because of the government? The government doesn't know how to handle the economy. That's why they leave private companies to handle that. Do you think the government will do Facebook? Will run Facebook? Do you think the government will run, for example, Google or Tesla? They will lose because they don't know how to do it. It's not something that it is administration. And some who are sitting in their chairs, they say, what do you think if we give some money to solar companies and we give them some money to boost this, because in the future we have a clean environment, we don't have a lot of oil, we have a lot of... But this is just investment for the sake of the people, not to make money. Making money has nothing to do with the government. The government is not making money. They take your money by tax. They don't do business. They don't have companies to make money from them. So, GGG, stop your way of thinking, or you can make big mistakes. You can make big mistakes if you follow this. And you say because it is government, they know better. They don't. The government doesn't know nothing about the economy. That's why the economy is run by the private companies. Tesla makes electric cars. It's not the government that knows how, that ask Tesla, do electric cars. No, it's companies, Tesla, who is doing this. If they succeed, the money goes to the Tesla executive and CEOs and to the investors. It doesn't go to the government, but the government is taking tax, yes. Is taking money easily, yes. They take money easily and they spend it as they wish. Yeah, that's why you see these politicians. Why the people they go to become politicians? If you want to understand what's going on, why? Because they will have all the money of the nation in their hands, and then they begin to spend it as they like. It's not their money, it's the people's money, but they do whatever money they like with the money. Okay? You see that? So it has nothing to do with private companies or so. So GGG, try to think about it. Now, if you have some ideas, please, GGG, send me an email. We can discuss this into details. If you have some companies you are interested in terms of investment, I can help you by just giving you some suggestions, okay? And we can talk about this. GGG said, any thoughts on the OTC stocks? Okay. OTC stocks are not regulated by the big exchanges. They are not. By the Security Exchange Commission. They have some regulations, but they are very, very weak regulations. It means the companies that they can't list their stock in the exchanges, in the big exchanges like New York Exchange or Nasdaq. They go to the over-counter because they don't want to give more information about the company. Now it is very, very wild there. It is a market that it is not really regulated. You can buy a stock at $1. Tomorrow you find it at 1 cent. Don't ask the broker why. Because nothing. Oh, they find that this company, it's not making any money. So they short it, it becomes 1 cent. So you put $10,000, tomorrow you find $100. So, but some people, sometimes you buy 2 cents, it goes to 10 cents or 20 cents and you make a lot of money. So there is a big risk there. So for me, I don't trade the OTC. I want to trade some respected companies in the market. I see them. I want to see Tesla, not just Tesla, small companies, even penny stocks, but I know they exist. I know that they make some money. I'm not just going to trade a ghost in the OTC, a ghost, a name. They say, oh, this company is doing this and this and that. But maybe it's not true. Who tells you that it is true? They don't file how much money they make. They don't file anything. So, you are trading like a ghost. Maybe you buy too expensive. Tomorrow it's so cheap. You lose all your money. But whenever you lose all your money, no one will help you. So it's over for you. That's why a lot of people, they like to trade it because most of these people, they go there. They are gamblers. They are big gamblers. They hear the news, they do that, they buy. Sometimes they buy 1,000, it becomes 5,000. Just in one day or two, because of the news, because of this, because of that. Sometimes they lose money, sometimes, it depends. So for me, I don't do over the counter. So in my channel, I spoke about them, but I don't do them. That's why my suggestion is to stay away from these companies. Especially in investing. When they ask you, oh, this is a new company, this is a hidden company, it does this and this and this, it will become the first company in the world. Stop listening to these people. This is what we call advertisement. There are a lot of channels, I see them, they do advertisement for companies, for brokers. And when they show you a stock, they show this company is having this. It is doing this and this and this and this. It's a new technology. It is a new, and it will become good. So buy it now at 10 cents. But maybe the company is not worth less than a cent. But they sell it to you at 10 cents or 20 cents, 30 cents, and they make a lot of money. The broker make a lot of money from this. Okay? So, GGG, try to understand this. Try to understand that I don't do OTC. Rapid Bullfrog, great answer. Thank you very much. I see that. Thank you. Rapid Bullfrog said, when you begin trading, consider your losses, your college tuition fee. When I first started, I lost $6,000 because I wasn't disciplined enough to use a stop loss. Now I am trading 6 figures. Yes, it's all about practice. It's all about continue to trade. Don't do crazy trading. Don't do a lot of gambling thing. I know you get tempted. Everybody get tempted to do crazy trades. Everybody. But understand, when you become more mature, when you have a lot of money at risk, you become very cautious about how to control your money, not to lose a lot of money. Okay? And try to make, it's better for you to make a high percentage, a good percentage each year, 20%, 50% a year, or 100%, or 70%. It's better than to do this than to do 200% one year and then you lose 50% next year because you do crazy trading. Okay? So it's better to be a consistent making money trader than to do gambling. Gambling, sometimes you make money, sometimes you don't make money. Oliver Blair, thank you very much coming, Oliver Blair. Hi Karim, do you think the market was going up because Trump was taking credit? No, listen. This is the funny thing. You know, Trump said that if I lose, the market will collapse. Now he lost. The market is going up. So this is what I am speaking about. It is not someone who will tell you what will happen in the stock market. Because the stock market is not owned by president or by government or by anyone. It's the whole institutions, traders, investors, and their decisions that goes to the stock market. It is their opinion who changed the market, not Trump or government or federal government that changed. So it's the opposite, Oliver. Oliver, it's the opposite, because Trump said that the market will be collapsing if I lose, as if he is thinking that there is old ideas or say oh, if the Republican win the market because all our corporations, they buy more and more and more, the market go up, so it's good. But this is not true. If you go to the history and you see the stock market and you see the Republican and you see the Democratic Party, it has no relation. Sometimes Democratic, they win, the stock market goes wild. Sometimes the Democratic, they win again and the stock market goes down. So it has nothing to do with that. It has nothing to do with politics or with politicians. If politicians, they can change the market, the people, they know that these guys, if they win, I'll put money there, I buy. When they win, the president win, I put my money, because all the 4 years the stock market will be wild and they make money. If those guys like Democratic, they win, I take all my money and they stay for 4 years away from the market because the market will collapse. This is stupid. This is the ideas that goes into the media, and people they trust these ideas, which if you go to history and see by yourself, it doesn't work like this. The market has no one to dictate what the market will do. Even tomorrow, no one will dictate. Cordell White, stop listening to these people. Herman said, what is buyback in stock? Why company buyback? Okay, Herman Man said, why company buyback? Okay. You know, the company, sometimes, let's say the company has 30% of the company capitalization. You understand that the company is divided into shares, okay? let's say, I just give you a small example. Let's say the company is 1 million shares. The company, let's say, has 50% of the shares. It means it has 500,000 shares that are owned by the company. 500 shares is owned by all investors, the traders, and anyone, because it is traded. Now, sometimes the company, they need money. When they need money, they don't want to go to the banks and they incur interest rate, very high interest rate, and this and that. Sometimes the banks, they don't give them enough money. So what they do, they sell some shares. They sell, for example, 100,000 shares. Now when they sell them, they get the money, they use it in the company. After a few years, they have enough money. The company is doing well. So what they do is they go to the market and buy the shares that they sold. But they have a limit. The exchange, they have a limit. They say, I don't know the exact limit, but for example, they say the company cannot have more than 40% of the global shares of the company. The 60% is for all the investors and traders that you see in the market. So the company cannot buy more than what it should be. It's illegal. Because it becomes like private. Because why the companies they are private, they don't sell any shares. It's just the first owners, the first shareholders, the first ones, they own the company, they don't sell any. Okay? They don't sell any. They don't want to. So, because they lose control. Because understand that when someone owns a lot in a company, he will be with the board and there is like vote, and he will get a lot of vote because of his shares he owns. He can fire the CEO, and this has happened before, where Warren Buffett fires the CEO of a company when he bought 10% or 20% or 30% of the company. He fires the guy. Why? Because he has more votes over all the people. That's why a broker, when they ask you questions, they ask you, do you own 10% in a company or in a broker or in a company or something like that? Do you own 10%? It means they get scared when you own a lot, because you can change the people in the company. So it's a big risk for the company. The CEO is the guy who makes this company, and then he gets fired. That is not true, but it happens. It happens to Apple before when he get fired from his own company. You see, this is the game. So you should know how to deal with that. So as I said, a company buyback is because of this stuff. Or they know that the company is going to do good in these 5 years, and they grasp some stuff and they begin to see some money. So they begin to buy back. But they can't buy all the shares in the market. No, because the exchange, they don't let them. Because it is a public company. A public company, there is a high percentage of this company to the investors. Anyone can buy. For example, someone from China is allowed, if he has an account, he can buy Walmart, he can buy Tesla, he can buy anything. So you understand? A company that it is here in America, like Baba, for example, Baba, which is called Alibaba, anyone can buy this Chinese company. You can buy. Because it is public in USA. Anyone can buy. But you can't buy the whole company. because it's public. Okay? Wiseman said Trump has an ego. Yes, everybody has an ego. Everybody wants to win. Everybody wants to have the money of the people. Everyone wants to be rich. This is life. Black Hole said, does algorithmic trading work? Now, this question, Black Hole, I have answered about one guy before, so I will just be quick. Listen, if you think that some people with math, they can make money easily, no. Because I will give you something. Anything that it is made with algorithm, it has some rules and some strategies. People are not following rules and strategies. They are illogical. That's why the market is illogical. For example, try to see Tesla. $250, it goes to $2,200. Is this logical to you? No, it is not logical. Is Tesla like Walmart, for example? Walmart is one of the biggest companies in the world, but its stock is $100 for 10 years. It goes a little bit up down. But why Walmart doesn't go up? Because the people, they don't love it. People, they love something that it is moving so fast. Because there is a bubble. Okay? So this bubble can make a small stock big stock and can make big stock small stock. Algorithm is based on logical mathematic formula. But the people, how do they buy and sell is just bias. It's just an opinion. For example, sometimes you see good news, but you see the stock, they have a gap down. You ask yourself, why? Why this company is making money and it is a gap down? Why? You don't find an answer. And then some people begin to give you answers like this. It's just because of investors think and investors, they are scared. Yeah, they give you stupid reasons that you see online always. From CNN, CNBC, Bloomberg, anyone who can just talk. They want just to give you any reason because you are waiting for a reason. Sometimes there is no reason. It's just an opinion. It's not a reason that it is made of fundamentals. It is just an opinion. Okay? That's it. Herman Mann said, so that means good news buyback, could price go up? Yes. It can, but it's not a true thing that you can just heard about it. When they say they buy, they have already bought. And when they buy into external exchange. They don't just go and buy from our exchange, primary exchange. You are wrong. It's just the name that it changed. For example, let's say, I will give you an example. An institution, a big institution, it has 1 million shares of Facebook, for example. 1 million shares. One billionaire, they like Facebook too much. And they see that this could be a big company in 10 years or 20 years. So what they do, he wants to buy 1 million shares. He has the money. Let's say like Trump or like Warren Buffett or like anyone who is big. He goes to a broker and he say, I want to buy 1 million shares, find me someone. So this transaction is not done in the actual exchange. It is done privately. It just names that change, but the block is the same block. It doesn't change. The owners change, but there is no fluctuation in the stock market. Because if a stock is $10 and the volume is 100,000 shares traded a day, if someone comes to buy 1 million, what does it mean? It means that the stock will go up from $10, it can go to $20, $30. So in order to avoid this stuff, they do a hidden transaction. It is a transaction that it is there, but they show it later. So when the company buy back, it's the past. It's already the past. Maybe the stock has moved a lot, like 3 months, but you don't see it. But it is done. It's already done, the price. So you can't just. But if you see the stock is continuing to go up, you can buy and you can make a strategy and buy. But understand that for me, I don't buy because the company buys, or because Warren Buffett buys, or because an institution buys, or because people speak about someone who buys. I don't trade like that. I don't trade because of this kind of news or information. I trade what I see. Okay, I trade the chart. I don't trade the news that I don't see. Okay. Black Hole said thank you. Rapid Bullfrog, great session. See you next Sunday if you are live. If you are live, yes. Thank you very much. Most of the time I do it on Sunday. Elia Palavan say I love you. I love you too. Thank you very much. Now, since we are at the end, please. Hope you get some information about what I speak about. If you have some questions, you just go to my channel, any video, you find my email, send me my email. If you guys, you are following me in my trading account, we began 3 weeks ago. We are at 17 point something percent profit. So you can see my stocks. You can see the stocks that I buy next month or next week or whatever. And you see how I make money for real. Okay? So thank you very much, guys. And see you next week. Thank you. Thank you very much.